Today's focus, the yen storm and massive long liquidations, Bitcoin plunges 25%, is this the bottom? Strategy dumps 1.44 billion in reserves. Can Microsaylor really hold on without selling coins? 2.3 billion lost in November. This week's 70 EM inflow is a reversal signal. December 2nd, Tuesday. Welcome to the 2B anti-TV Chinese channel, B Alliance. This is Dong Dong. First, let's look at the most important recent crypto headlines. This time, Bitcoin's plunge from December 1st to 2nd was significant. It really wasn't a technical move on a whim, but rather a combination of a single comment from the Bank of Japan and derivatives, triggering a chain reaction of liquidations. Ueda hinted that a rate hike might come earlier than expected, and the market immediately took it seriously. Yen carry trades started fleeing overnight. The yen surged, and assets like Bitcoin, which are extremely sensitive to liquidity, got hammered instantly. At the same time, the derivatives market also flipped, with funding rates turning from positive to negative in an instant. The deeper the negative funding rate went, the more long positions got wiped out in waves. In just 2 days, $3 billion in open interest evaporated. This was a massive deleveraging event. The logic behind this move was simple and brutal. The Bank of Japan's signals sent the yen soaring, carry trades fled, funding rates flipped negative, longs were force liquidated, and BDCs accelerated the squeeze. Right now, the market is still watching the Bank of Japan, waiting for the actual policy to be implemented. Once the uncertainty is gone and Bitcoin has finished deleveraging, it actually becomes easier for it to stage a rebound after taking a bath. The current situation is very real. Short-term traders with 1 to 3 month horizons are experiencing the most devastating moment of this cycle. Their entry cost is at $113,692, but spot prices have stayed stubbornly below that level, leaving them with losses of 20% to 25% over the past 2 weeks. The losses are so bad you can almost hear their hearts breaking. This kind of drop is a classic capitulation-style crash. Capitulation has pushed people to a point where they have to choose between cutting their losses, stopping out, or being forced to liquidate, one of these three. What's even more ironic is that when short-term losses get this bad, historically it usually means the market isn't topping out, but is actually close to bottoming. The current wave of losses is actually paving the way for a more comfortable entry range in the next cycle. But on the other hand, the macro environment still isn't stable, and the market structure hasn't fully turned bullish yet. So before jumping in, make sure to keep your cool. Don't get carried away and jump back in, only to get slammed by the market again. Right now, a supercritical lifeline has just lit up. The cost basis for UTXOs held for 12 to 18 months is roughly around $70,000. These people aren't short-term gamblers, nor are they the old-school holders who never move their coins for years. They hold a lot of chips and are very sensitive to market trends. Historically, their cost line has basically marked the boundary between a correction and a true bear market. If this level is breached, mid-term players immediately go from making money to losing money. Once their mindset collapses and they start selling, Bitcoin can easily slide all the way down. If this level holds, the structure remains stable, the bear market signal doesn't light up, and it often becomes the starting point for the next reversal. Right now, Bitcoin is still standing above $70,000. The meaning is simple. This looks more like a correction than a bear market. As long as this lifeline isn't broken, the market is still following its normal cycle, not heading into a doomsday scenario. Please like and follow for the latest updates from the crypto, blockchain, and mining worlds 24 hours a day. Click the little bell to join the channel and become a member and receive exclusive wealth codes for members from Monday to Friday. While the industry is still debating whether the Bitcoin standard is viable, strategy has already floored the accelerator and rushed to the front, acting almost like a corporate version of a Bitcoin reserve bank, relying on preferred shares. They continue to raise funds. But lately, the market's appetite has been pitifully small. STRC has dropped all the way to $96.41, which is much lower than its original $99 to $101 range. To lure investors back, Pace has also raised the rate from 10.5% to 10.75%. Products originally designed for an era of US interest rate cuts have now turned into rate hikes caused by falling prices. It's not the market that's driving up the yield, but rather the price is forcing them to raise the interest rate. So here's the problem. As the interest keeps going up, can MicroStrategy really handle it?
MicroStrategy has set up a $1.44 billion US dollar reserve fund to pay for preferred stock dividends and interest on outstanding debt. The funds come from the latest round of Class A common stock issuance. The company's goal is to ensure at least 12 months of risk-free dividends and to gradually expand the reserve. Eventually, they aim to cover a 24-month or even longer period.
I think we're pretty indestructible. Our leverage is, in the range of 10 to 15% and is currently trending towards zero, which is extremely, extremely robust.
Founder Michael Saylor emphasized that the company holds 650,000 bitcoins, accounting for 3.1% of the total Bitcoin supply. To strengthen its commitment to credit investors and shareholders, the company has established a US dollar reserve that can cover 21 months of dividend payments.
This time, MicroStrategy is laying all its cards on the table, saying, if I cannot pay dividends, fine, I'll just prepare enough cash reserves for 21 months in one go. What they're really saying is, I'm not selling any Bitcoin, so do not get any ideas. Strategy is holding 650,000 Bitcoins. If they really dumped them, would not that cause a systemic earthquake in the crypto world? This reserve fund is a super strong reassurance for the market. Its main purpose is not just to pay dividends, but to put an end to any speculation that Strategy might dump their holdings. In the short term, this pill is enough to keep things stable for now, but in the long run, it all depends on whether Bitcoin cooperates, whether global liquidity looks good, and whether Strategy's enterprise-level Bitcoin experiment can keep running smoothly. In November, Bitcoin ETFs experienced an epic outflow, with a whopping $3.5 billion leaving the market, almost enough to bring out the historical records for a bow. What about these big funds? They were hit with massive redemptions, and BlackRock's IBIT suffered the most. $2.3 billion were withdrawn in just 1 month. On November 14th, $460 million, and on the 18th, $520 million, like getting hit with 2 heavy blows in a row. Retail investors were scared off on the spot. It seemed like no one loved Bitcoin anymore, and it was about to cool off. But as for BlackRock itself, they remained remarkably calm, as if to say, you're anxious, but I'm not. This is just institutions changing their approach. The wave of withdrawals felt like a storm, but BlackRock's composure was actually the most unusual part of the whole situation.
Cristiano Castro, BlackRock's Director of Business Development, noted the Bitcoin ETF is already a main revenue driver, with this year's explosive growth far exceeding internal expectations. He added that demand has remained strong throughout the year. At the peak of market sentiment, the assets under management of the ETF once approached $100 billion. He emphasized that the core value of ETFs lies in their high liquidity and flexible allocation, so recent fluctuations in scale are a normal part of investors adjusting their positions and do not indicate weakening demand.
After 4 consecutive weeks of outflows, Bitcoin and Ethereum spot ETFs have finally stopped the bleeding and rebounded this week. Bitcoin saw a modest inflow of $70 million to start things off. Ethereum was even more impressive. It directly attracted $312,600,000 in inflows, as if it made up for all the previous sluggishness in one go. It doesn't look like everyone suddenly got hyped again, but rather that after the market adjusted and prices stabilized, the money was willing to come back. It's simple, the market didn't crash. Demand isn't dead either, it's just going through a brief adjustment. So what's the current vibe around ETFs? It's shifting from the tense, watchful mood of November to a cautious warming up in December. To sum it up in one sentence, it's not a bull market yet, but the bull is back.
Here, there are legends of overnight riches as well as carefully crafted scams. This is a dark forest of chaotic development, but it also nurtures a lake of hope leading to the light. The ultimate destination of faith is freedom. The endpoint of consensus is equality. This TV show will guide you through the fog, help you see the future, and together we'll gradually become wealthier.
With countries from around the world gathering at Bitcoin MENA, the Middle East is set to become the new center for Bitcoin. Yitao's 27-country MSCA anniversary has become the global entry ticket to crypto. If you ask what the crypto community has been spiritually invested in lately, it has to be the Bitcoin MENA 2025 event, which will ignite on December 8th in Abu Dhabi. Not only is the event being held at the Abu Dhabi National Exhibition Center, but it's also strategically scheduled right after the F1 Grand Prix, as if to say, don't leave yet, the next act is even more exciting. 12,000 people from over 100 countries are expected to show up in person, and it's anticipated that $150 million in investments will be secured on the spot. The Middle East presence this time isn't just strong, it's off the charts. The group and BDC are joining forces to host the event. They're going all out. All 150 exhibition booths are packed. Exclusive yacht spots in the Gulfside social area are fully arranged and every detail is meticulously handled, making it clear to the world that the stage for Bitcoin is shifting more and more toward the Middle East.
Two questions I always get are, why Bitcoin and not other crypto assets? And the second one is, am I too late? The answer is quite simple. It's the only asset with absolute scarcity, guaranteed by the most decentralized and secure network, so there's nothing else like it on Earth. This is the best store of value, not just the best digital store of value, but the best store of value, period.
This time, Bitcoin M1NA 2025 has truly brought an all-star team to the Middle East. Michael Saylor, co-founder of MicroStrategy, will make his debut in the Middle East, delivering a keynote speech on corporate treasury management amid oil market volatility. His earlier prediction that Bitcoin could reach $150,000 by the end of the year has made him the focal point of this conference. The conference will also bring together heavyweight guests such as Binance founder Changpeng Zhao and eToro CEO Yoni Asia, who will focus on the retail adoption of Bitcoin. Bitmain's Gao Ying will discuss sustainable mining. In addition, Pakistan's Minister of Blockchain Bilal bin Saqib and representatives from the UAE government will analyze Islamic asset compliance and regional regulatory trends.
To put it plainly, the entire industry is quietly acknowledging one thing: the center stage of Bitcoin is shifting from Wall Street giants to Middle Eastern superpowers. This time, Abu Dhabi isn't just hosting a simple conference. It's making a public declaration that the era of value has come, and now it's their turn to take the spotlight. Just look at top figures like MicroStrategy's Saylor, Changpeng Zhao, and Yoni Asia, all sharing the same stage. How can Bitcoin still be seen as just an investment asset? This is clearly a matter of national-level strategic reserve assets. Bitcoin is practically a poster child for the shifting landscape of global power. In the next decade, the power to set Bitcoin's price and the global discourse around it might really drift from the US all the way to the Arabian Peninsula. So where will the main stage of the Bitcoin drama be next? Charts won't tell you. The conference floor will, by showing who shows up, who places their bets, and whose words set the tone for the next act. In the blink of an eye, it'll be the end of 2025. It's also been exactly 1 year since the EU's unified crypto regulation came into effect. Over this year, the biggest change is that the crypto world is finally no longer just a wild, unregulated frontier. Now, it's more like crypto is sitting at the same table as traditional finance, and it's a proper game, with referees and rules. MiCA wasn't just made up on a whim. It took several years to come into force. In the past, with CASP, it was always, let's wait and see. Now, it's all about, hurry up and get me a license. The old vague regulatory approach just doesn't work anymore. MENA comes in with 5 clear red lines, each one hitting a major pain point in the industry, forcefully shifting the European crypto market onto a compliant, battle royale-style playing field.
So yes, as you said, MENA is a very large-scale regulation. If you compare it with the Genius Act, if you take MENA's goal was to implement a regulation for markets in crypto.
And MiCA's license passporting mechanism. It unifies EU regulation. CASPs need only one country's authorization to serve all 27 countries and must establish a real decision-making body in the EU with at least one director. Ongoing supervision's core is the legal requirement for client asset safety. Assets must be deposited in an EU credit institution by the next day. Alternatively, client assets at central banks must be segregated from the company's own assets, reconciled daily, and the company bears compensation responsibility. Trading platforms must strengthen market surveillance, keep order books, and disclose data almost in real time. Token issuers must have a legal entity and a white paper. Retail buyers are granted a 14-day withdrawal right. For assets like Bitcoin that have no issuer, platforms are responsible for disclosure and risk warnings.
The MSA passporting mechanism is like dropping a regulatory nuclear bomb on the EU. 57 CASPI licenses were snatched up in an instant, becoming red hot. The German license is as solid as an EU golden visa, with all the banks flocking there. The Netherlands, on the other hand, is a paradise for payment institutions and for crypto-native companies. Going there feels like returning home. In the past, for a company to enter the EU, it had to run around 10 different countries until it was exhausted and spent a fortune. But now, with just one license, the 450 million people market in the European Union opens to you. This year with the MSA, it closed the old era in crypto where who blocked others first won. In the past, it was about guts. Now, it's about compliance at lower cost and smoother bank connections. The United Kingdom and Singapore are copying this approach, and the global regulatory net is tightening. The crypto industry, once known for its wild path, is now preparing to hold trillions in assets. It's a legitimate big stage now.
Elon Musk summed it up in one sentence. Alphabet's AI machine is running so well that both Gemini 3 and the chips can handle it. As for Nvidia, that goes without saying. It's still the one that no one in the AI world can do without. This time, Japan is really serious. They've set up a new agency called the Government Efficiency Department. As soon as it launched, it targeted all sorts of tax policies and subsidy goals that were holding things back. Very straightforward. All those projects that spend money without getting things done are being singled out and eliminated, giving the financial system a thorough cleanup. The latest data has put Ethereum back in the spotlight, with the mainnet TPS soaring directly to 32,950, setting a new all-time high. Even more impressive, a single project called Letter accounts for 90% of the activity in L2. Yet every day, it only pays Ethereum a symbolic $685 in toll fees. Simply put, your chain is insanely busy, while over here, spending money is as easy as buying a bottle of water. The White House announced that Trump's Tuesday schedule is packed. First, he'll convene a cabinet meeting with his team at 11:30 a.m. Eastern Time, and then at 2 p.m., he'll come out with some big headline news. Hong Kong telecom company Moon Inc. 1723 continues to buy in. This time, they bought 7 bitcoins at an average price of $86,233, bringing the company's total holdings to 42 bitcoins with an overall average cost of $90,363. Buying more as the price drops, this is a classic example of enterprise-level conviction, doubling down even when stuck.
Today's example question is a soul-searching one. Would you become friends again with someone you've fallen out with? Most people don't pull out the nail completely clean. There's always a hole left in the wall. No matter how hard you try to mend a relationship, the cracks will always be there. Many relationships don't fade suddenly. It's when you fall out that you finally see clearly that you were never really on the same path. Mo Yan once said something harsh. All harm is intentional. Before someone hurts you, they've definitely weighed the pros and cons. The reason they dare to do it is because the cost of hurting you is low, but the benefit is high. So the greatest clarity for adults is knowing when to withdraw from a relationship. A broken mirror can't be made whole again, and cracks can't be smoothed over. What you can do is remember the pain of that moment, hold on to that sense of caution, and then keep moving your life forward. Don't look back, don't try to hold on, and don't give the same person a second chance to hurt you. All right, that's all for today's main content. Our channel focuses on valuable news summaries in the crypto, blockchain, and mining space. We provide both news updates and in-depth special reports. If you find our channel valuable, feel free to share and follow us. You can also become a member and receive our members-only wealth codes from Monday to Friday. Let's get richer together. And in the next bull market, add another 0 to your net worth. See you tomorrow.